This is Know Your Options. It's a new segment here on BNN Bloomberg where we explore the world of options. We talk to an expert. He's Thom of Moat Financial. And most importantly, we take your questions. And here comes question number one on our Know Your Options segment. Vince in Halifax writes as follows. How do you use options to hedge existing stock positions? Do you need to buy both puts and calls?
So I guess the hedging piece of existing stock positions would be buying a put. So if you own a stock and you're worried that it's going to go down, you can just go and buy a put. Now, buying a call would not add any hedge to it, and in fact, it would add cost. So I think what we look at is, especially in times of higher volatility like this, option prices really go up. So the price of insuring that position goes up. It's kind of like if you were buying house insurance and your house was already on fire, it would cost a lot more. So if you're going to be buying options, you likely want to sell them. So what you can look at is buying a downside put. So if we were looking at where the stock is trading, you sell that downside put, buy the downside put and then sell an upside call. So you're doing a covered call and using that money to pay for the protection. So that will help you not just buy insurance over and over and over and then end up losing money that way.
Okay, thanks for that question. Here comes another question from Mo in Whitby, Ontario. How do I buy options? What platform do you use? Can I buy them on Questrade or TD Direct Investing or similar platforms? Great question. What he's referring to is online discount brokerages, which many of our viewers use. Can you buy options via those platforms?
So you definitely can. You just need to open an options account. So you have to have the accounts approved for trading options. But to my understanding, we don't use any of the online brokerages ourselves. We have our own trading system.
Right.
But any online brokerage will allow you to open option accounts, and you can be selling covered calls in registered accounts, buying options in registered and non-registered, and then in non-registered you can sell puts. So pretty good flexibility and lots of availability out there.
Okay, that's another good question. Let's go to the phones for the first time in our show. Peter is in Ottawa. Peter, thank you very much for calling us on Know Your Options. What's your question to Chris?
Oh, thank you for taking my call. My question for Chris is, last year I sold some calls on Crescent Point, now Vern. I think it was 10, and I made some money on that, but at the end I got called away, and the fees for the sale of the stock was about $70, much higher than the regular standard fee. And I was wondering, is it better just to use a covered call ETF or try to use options when you're a retail investor?
Okay, so I guess there's kind of a couple questions in there. So if you are selling a covered call and then you get called away in these online brokerage accounts, you will get charged a commission to sell the stock. So my understanding is it's typically the same price as if you just sold the stock normally, but that's something I guess you have to look at the fine print for those accounts. If you are wanting to do things on an individual stock basis, then you're going to want to own the stock and sell those calls yourself. And most of the time when you sell a call, you won't get called away. If you're selling a call option and getting called away every time, it means that you're picking great stocks and they're going up every single time. So you're probably making a lot of money and not really too worried about some commissions like that. So with a covered call ETF, there's a whole lot of them out there, and you can be broad market based or you can be sector specific, and then you can actually go right to single stock covered call on a lot of like the Mag 7 stocks. So with these, you definitely want to check the MER. They can be a little bit higher than a lot of just regular ETFs, if you want to call them that, especially the single stock ones. So if you're really trying to make sure you're not paying too much, you got to drill down on that. And then if you are using a broker and a portfolio manager and they're buying these ETFs, you want to make sure you're not paying fees over and over. So I guess you'd have to drill down on each individual basis.
Okay, thanks for the question, Peter. Let's go to Ed in West Kootenay, BC. Thanks, Ed, for your call. What's your question to Thom?
Good morning, Chris. I'm a self-directed investor, and I'm just wondering if you could recommend a good book on the subject of puts and calls.
I'd say the the best book that I've read is really the one from the Canadian Securities Institute. So looking at the options licensing course, that would be where I would start. They will go all the way down to, and they're not trying to sell you anything beyond that. They're just trying to teach you how to use options. The Montreal Exchange has a lot of online presence as well. There's webinars from a lot of other sources. In fact, we've got a webinar coming up next Tuesday that you can register for on our website. So there's a lot of resources out there. But as far as a book, I'd go right to the regulator on this one and get the options licensing textbook.
So that's the Canadian Securities Institute, Ed. They have a website. I'm on it right now. Part of that website, on that website, you'll find the Options Licensing Course, OLC, and it will have an overview, a curriculum, and study materials as well. Now, I believe there's a fee for that course, obviously, correct?
Yeah, they're not giving it away for free, but I would honestly look at that like taking driver's ed.
Right.
You're going to be out there, you're going to be putting real money to work. You might as well try to get the best education you can on that.
Okay, thanks, Ed, for a good question. Here comes an email from Ted in Calgary. Ted writes as follows: do options change anything when it comes to doing your taxes? Another great question.
So the tax treatment of options, this is another really great benefit of options trading. So obviously, if you're buying and selling in a registered account, there are no tax consequences. But if you are generating income by selling covered calls in a non-registered account or selling cash covered puts, these are treated as a capital gain. So I'm obviously not an accountant or a tax lawyer, so I'm not here giving tax advice. But if you are generating income by selling covered calls, you are going to, it is meant to be treated as capital gain. So it's very tax efficient when compared to income from a bond or even from dividends. But the other nice thing with that is you are going to be able to generate income on stocks that don't even pay a dividend. So a lot of flexibility and treated fairly from a tax perspective.
Okay, let's go to another caller. Ashen is in Vancouver. Hi, Ashen.
Hi, how are you guys? Thank
Great.
you for taking my call.
Thank you.
My question is in regards to leaps. I've heard a lot about it being used in the option world, and how does it fit within the investment strategy, and who's the right audience for this? Thank you.
Yeah, so leaps, those are long-dated options. So I think it's once something's longer than a year, it's classified as a leap. So this is something where if you are looking to either cap a gain and generate income over a longer period of time, you can be selling these, or you can be buying these to gain a little bit of leverage. So not recommending anybody layers in a whole bunch of leverage, but if it is something that you did want to take a look at, that's where, really on high dollar stocks, that's a place that we'll sometimes look at them where, if something's trading at $900 a share, instead of buying the whole thing, you buy a long dated $450 call. So your capital outlay could be less, it'd be about half, and give you a little bit of leverage. But we don't do anything too crazy with leaps, but definitely it's where you're not trying to take a short-term view on a stock. You're giving yourself more time. Just to get a little bit technical on how options work, obviously these things are known as wasting assets. The time value that's part of them, which I'm sure we'll touch on at other times, that decays over the course of time as the option gets towards that expiry date. And that time decay accelerates as you get closer to the end. So if you buy an option that's out 2 or 3 years, it's going to have a pretty slow decay for that first, call it a year. It's really in the last few months or last week that the time value really erodes.
Okay, let's get one more call in. Christopher is in Mississauga. Christopher, thank you very much for your call.
Hi, Paul and Chris. I got a quick question. What happens if I have a covered call and then it expires? I try to sell it and it expires. Thank you.
Okay, so if you have a covered call. That means you're long the stock and you've sold a call option against it. So as you get to expiry, if you maintain that position, one of two things happens. If it's in the money, so if you've sold, say, a $200 call and the stock is above 200, you will get called away. They exercise automatically, and it's all taken care of. That happens on a Friday. You wake up Monday morning, look at your account, the stock is gone, the option's gone, and you've got cash. If the option is out of the money, so we'll use $200 as the example, if the stock is trading at 190, that option expires worthless. You get to keep that cash, and the option is out of your account when you open it up on Monday morning. So those are the two outcomes that are available, whether it's in the money or out of the money.
Okay, and that is the last question that we have time for today. I know Hal in Montreal was on the line, and Maureen wrote us an email. And Hal, just give us another call 2 weeks from today, perhaps. That's the next time we'll be doing Know Your Options. And Maureen, we're going to keep your email on file, and we'll do our very, very best to have Chris tackle that question.